You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time, once again, for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and still is from a futures options trading and trending and analysis and unusual activity perspectives. Going to talk the volume, the volatility, the skew, the OI, the hot trades, and a whole bunch more across all your favorite products. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, at least we hope so, Options Insider Radio Network. Reminding you, wherever you get this content, keep rating and reviewing it so your fellow listeners can continue to discover it in these trying and troubled times. Of course, keep those questions coming too. A lot of you hitting us up with requests for various products and indeed product categories. You know, if they're reasonable and if they trade some options volume, we could certainly look into throwing those in the mix. So if you have a product you want profiled here on TWIFO, hit us up. You know where to find us at Options on most of the major social media platforms. Questions at theoptionsinsider.com also works. If you join us live on the Mixlr live stream, going to add more live streams in the future, but Mixlr for now, you can ask your question. You get bumped to the head of the class. How's that for pretty cool? So you can ask them there as well. We do have to hear from all of you guys and gals out there. Let's see who we're hearing from on the old program today. I am pleased to say, once again, we are going back to the FTSE Russell studios, where I'm joined once again by my compatriot in all things futures options, Mr. Sean Smith, the managing director of derivatives licensing over there at FTSE Russell. Mr. Smith, how go things in the FTSE Russell studios, sir?
It's great to be back. It's great to be here. It's great to have some working technology. I'm just excited to be here. We're going to have a great show today, Mark.
I just did a double take. I thought you were sitting right next to me. You sound so good, sir. Those FTSE Russell studios coming in loud and clear. But let's do it, listeners. Let's kick it off the way we always do. It is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, where we break down all of the big action over the course of the past week, pretty much since our last show over there at CME Group. We break them down to the upside, a.k.a. the light side, and to the downside, a.k.a. the dark side. Mr. Smith, you know what comes next. You know what I'm going to ask you. Where should we begin our journey this week, sir?
I'm going to throw you a curveball. I'm going to say, let's go dark side.
Ooh, look at you. You've been watching a little Star Wars over the weekend, getting a little Darth Vader vibe going. Either way, it's a good choice. It's a good choice, Mr. Smith, because roughly 2/3 of the report is in the red this week, sir. So a little bit more to parse on the dark side. So
let us talk about.
Yeah, let's do it. Let's begin our journey there to the dark side, listeners. Number 5 in the blood red direction this week is Brent. Going to be a lot of energy on this dark side here, as you will see. Brent off 5.7%, almost 5.69%. So a bit of a bloodletting out there in Brent, followed by number 4, heating oil, almost 5.75% to the dark side. And then superseding that, saying, nope, hold my beer. We got RBOB coming off about 6.75%. So rough times in the energy complex. I think we'll be getting to that today. By the way, RBOB was number 5 to the upside last week. It was up almost the exact same percentage in the other direction. It's off 6.72% this week. Last week, it was up 6.79%. And before you say, hey, break down RBOB, yeah, it does about a couple of thousand contracts. So not a lot lighting it up in the land of RBOB. And then saying to all of them, yeah, forget about you upstarts. Let's let the Vol King in the energy complex have its crown here. Nat Gas, number 2, off 8.66%. It was number 3 in the same direction last week, off 2.4%. The only thing that could dethrone energy to the dark side this week, listeners, is lumber. Lumber just keeps moving and shaking every week. This week, off 12.5%. And don't ask, I wish we could parse lumber, because lumber has been moving so much. And it's not like Nat Gas, it moves, but it's a $3 contract. Lumber is actually a pretty meaty / beefy, some might even say meefy, to use the vernacular of some of our other shows on the network, contract. And it still moves a substantial percentage. So I would love nothing more than to break it down for you. And yet, for whatever reason, which we've discussed on the show in the past, not a lot of options paper really going up in the land of lumber. Let's move on to the upside, a.k.a. the light side. Don't tell Lucasfilm. Number 5, it's rough rice, up an even 2%. It's the first time I've said it's been a good week for rough rice. Usually the joke is it's a rough week for rough rice because it's been selling off quite a bit. But this week, to the upside, up 2%. Number 4, it's the old Nikkei, up 2.03%. Then we've got lean hogs, our old friend Hoglug, back to the upside, up nearly 3%, 2.87%. Numero dos, it's the old Eurodollars, up 5.4%. It was number 1 to the dark side last week, off about 2.8%. And number 1 with a bullet this week is palladium. So almost 5.5%. So a lot to unpack, a lot to parse this week. Mr. Sean, there's so much red in the energy complex. I think we should start there. We also have a request coming in. This comes in from Wayne Shand. He requested oil. He put in hashtag oil. He says, having quite a session today, down 5%, began around midday. What's interesting is that it began into session highs. So as so often, the algos made sure most traders will have been trapped on the wrong side. Well, looking at those evil algos. So it sounds like we got some listener love for energy. What do you say, Mr. Sean? Should we hang our hats first in the Texas tea, sir?
I'm absolutely supportive of energy first today.
All right, here we go. A little bit of the old energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let us begin our journey in the land of all things black and sticky. In particular, you guys want to find this, go to the TWIFO reports, cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Those both work. and they should get you where we are now. Then you have a big drop down. You could choose from all the different product complexes out there. You want to go to energy and then go to WTI, where we will begin our journey. WTI was not on the movers and shakers. It was Brent, but not a lot of goes up in Brent. And we talked nat gas a lot on the show of late. So trying to mix it up, bring WTI back into the conversation. It's also what our listener requested. They requested oil out there. And, the big narrative when we talked about WTI recently on the show was, what was going to happen with this 60 handle. It seemed like the options paper last week, listeners, was fading this action north of the 60 handle. A lot of action on the put side in terms of put buying and call selling. It seemed like the fade was back on. Remember, we used to talk about this back on the 40 handle. Doesn't seem like that was that long ago. But where they're fading spikes above 40, now it seems like the market was fading a spike above 60. That seemed like it was the smart play, because coming into showtime, we're seeing WTI just a tick north of the 60 handle, 60.08. So it has given back pretty much all of that action it had north of the 60 handle, off almost 5.6 points, or about 8.5%. That's just this week. And of course, our listener Wayne mentioned it had a big sell-off just today. So a lot of that action coming hot and heavy coming into showtime. Let's see. Actually, a decent amount of paper on the tape, almost 400,000 contracts already. So a pretty hot and active week out there, listeners. Let's go on out to where the most action was. That was out there in the May contract, 34.5% of the paper going up out there this week. That contract has about 28 days to go. So a nice, firm, reliable frame of reference for us to analyze some skew and some vol. If you wonder what the vol is right now, obviously ticking up, because we saw a bid to that put wing last week. We moved into that put wing since that last show. So we're going to see vol tick up. And that's pretty much what we saw. It's up to about 42.36 right now. It's up nearly 7 points, about 6.75 points. So vol getting a little juicy again out there in WTI. Oil is not really commonly associated with volatility and being a very volatility and vol changing, vol moving product. You listen to the show, that's not the case. And vol changes, vol moves. It can get pretty volatile out there. It can come off again just as aggressively. So if you like trading volatility, we always talk about volatility in the parlance of equities traditionally, but there's a lot of vol to be found out here in the energy space as well. So vol traders starting to pay more attention out here in all things energy. Coming into the show right now, we're seeing puts were pretty monstrously bid last week. They were 10.4% in this May contract last week, bid above the at-the-money vol, which was, again, about a 36 and change last week. So you're paying 10.4% premium, listen, that's what that means, to that already decently high, not super high, but decently high, 36%. And now you're paying about a 10.4% premium for the privilege of buying those downside puts. Looks like those puts paid off, though, because we've broken through a lot of those strikes or gotten closer to them. Now those puts are about 5% bid. You might say, why are the puts coming in? Well, it's because we've broken through some of those strikes to the downside. When you do that, people sometimes take those puts off. They're selling them. That's closing paper. It's going to bring in the puts a little bit. That's typically what you expect when you start moving downside. Now, if you explode downside, but this continues more aggressively, you'll start seeing those puts get jacked up again. But right now, moving down the skew curve, puts coming in. And let's see if the calls get bid. Yeah, that happened this week too, because the calls were 6.3% cheap. So a discount to the at the money last week. This week, 1.6. So calls is pretty much a nice rotation of the skew curve, as you probably would expect. If you don't get that stuff, check out some of our educational content on the network, listeners, like Options Bootcamp or Options Playbook Radio on our Education Wednesday shows, or check out some of the links here in the TWIFO report. They'll explain more about how these tools work and how things like shifting and sliding of the skew actually works. In terms of the most active contract out here, you probably can guess, listeners, it's probably going to be something in the 60 strike, and you would be right, except for the 70 strike bouncing in there saying, wait a minute, hold on there, whippersnappers. I got some paper to do as well, because the 60 strike is hot. And if you add it up across all the months, it probably is number one. But in terms of individual action, which option in a particular month led the dance this week? It was actually the D's 70s, 19,300, including a whopping 8,500. Pretty much half of that going up today. Another 8,000 going up on Tuesday. So 2 big days this week for the 70 strike in D's, today and Tuesday. Tuesday was opening. We don't really know about today's paper. So maybe looking a little optimistic on Tuesday, then they decided, whoa, bridge too far. Let's take them off today. Either way, a lot of paper going up on these D's 70s, listeners. Nearly 20,000 contracts already So pretty hot and heavy. Then we got the DEES 65s at number 2. So a lot of DEES, actually, which is kind of interesting. DEES upside. Not what I expected on the number 1 movers and shakers for WTI this week, listeners. Again, the big day is today, 7,600 today. Again, reflecting what our listener Wayne was saying, a big movement out there today. 6,400 contracts on Tuesday. About 5,000 of that was opening. So mostly opening paper on the 65s on Tuesday. We don't know today yet, but maybe, again, a similar narrative, breaking back through these strikes. They're deciding to get the heck out of Dodge. Either way, a decent amount of paper there. Then we go out to what you probably would have expected. It was the May 60 puts. They did 12,500 contracts. Actually, I'm going to take that back. As of a few minutes ago, they just tacked on some more. So 13,228 now. So they're trading hot and heavy today as well. About 3,000 so far today. So the big day for them was still Monday with about 7,000. Most of that opening. So some folks coming in on Monday maybe opening up to the dark side there. If they were buying those puts, that seemed like that worked out pretty well because, again, we're right at that 60 strike right now. So that's the number 3 trade out here. Let's look really quickly. 70 calls also active here in May, doing about 11,300. Again, the lion's share today. So today's where a lot of the action is out there in all things WTI listeners, which is, again, not exactly unexpected. Let's see if we could find some interesting aberrant strikes going up as well. 80s also pretty active here in July to the tune of about 8,000 going up this week, and 91 calls and 90 calls even trading. 90 calls were trading out here in August to the tune of about 3,000, 3,200, and the 91 calls trading a little bit less, 450. It's just an interesting strike. 91 out here in the end of the year going up in November. So fascinating stuff. Also seeing some double puts, 55 puts going out here in June of 2022. So longer term paper also afoot. Stuff's kind of all over the board here, which makes it kind of fascinating out here. But definitely DEES upside leading the dance this week. That's not what I expected. I did expect the skew to come in. I did expect some more vol to tick up. And now we're kind of teetering on this precipice of the 60 strike. You know, where do we go from here? Unfortunately, not a lot of bias coming in terms of the options right now. The skew has come in. It was biased heavily to the downside last week. This week, not so much, at least here in the May contract. So that's pretty much across the board. They've all come in. If you go a little bit farther out, not as much the case. Like if you go to DEES, which is, again, where we saw a lot of action out here, about 17% of the paper went up in DEES this week, listeners. The puts were 9.2% rich last week. This week, 10.5% rich. So the puts are a little bit more bid in DEES, and the calls are a little bit more offered. 5.3% cheap last week, 6% cheap this week. So you get a little bit farther out, and you're still seeing a predominantly strong put bias here and a bias to the downside. So maybe you can read into that a little bit. And that future is actually already below the 60 handles at about a 57.37. So interesting stuff afoot out here, listeners. Longer term, a little bit more of a fade. What are you guys feeling out here for WTI? You think 60 strikes going to hold? We already threw it in the longer term contracts. Is this just a momentary blip, or is this kind of a sign to things to come? Folks have been wondering for a while, obviously as energy and as crude gets more lofty in terms of valuation, more and more domestic supply can come online. It becomes much more profitable to run those shale production facilities at $60 than it does at $40, right? So that's always been the question. When this domestic supply comes on, that could maybe start squeezing things to the upside a little bit and start forcing us back down. That was the whole reason OPEC really kicked this price war off to begin with, right? Was try to squeeze out some of these domestic producers. Have they been squeezed out? These are the questions that linger. But right now, we're hovering at this 60 strike. Let us know what you guys think as we keep on rolling. Sean, there's been a lot popping off in equity land as well. So I think we'll hang our hats there next. A little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, now we'll get to the land of volatility. There's vol and all these other products we're talking about, but volatility still is really synonymous with all things equity. So let's set the table out here from a vol perspective. Coming into Showtime, how long, Sean, have we been talking about the RVX, the VIX of the Russell 2000? Can't break 30. It's been north of 30 pretty much since the upside explosion really began towards the end of last year. Well, it did break it this week finally, 29.6. coming into showtime. So ever so slightly below it, but it did finally break the 30 handle out. That's down to almost 2.5 handles from where it was this time last week. VIX coming into showtime also south of the 20 handle. Yet another long time watched barometer level for volatility. Is that about a 1976? Good year. Coming into showtime. Puts that down about 2 points from last week. Puts that VIX to RBX spread at a little bit north of 10, almost 10.2 points. That's roughly unched from where it was last week. And you can see why, a little bit of more movement in the RVX. It's about a couple of tenths of a point difference from what it was this time last week. So that spread has kind of moved in lockstep, which is kind of interesting. Both RVX and VIX breaking through key levels to the downside. Let's see if they can keep it there or not. Last time VIX had a dalliance south of 20. It didn't stay there very long. We'll see if that is the case this week. VVIX, which is the vol of vol, at about a 112, almost 113 coming into showtime, up about 3/4 of a point, but pretty much unched from where it was this time last week. Vol is obviously frothy right now. It's not going to go much lower than that. And vol Q, which is the at-the-money vol of the NASDAQ 100, a.k.a. the newest tradable vol product over there at CME land, 26.5. That is almost literally unchanged from where it was this time last week. Why? Because NASDAQ was getting annihilated earlier this morning. I'll have to see if it's still getting annihilated out there. But NASDAQ has been leading the charge to the dark side out there this week. Or at least today's session, kind of a bit of a rough day for all things NASDAQ. Let's see where we are. Off 2.6%. Yeah, it looks like the sell-off has exacerbated across the board, listeners. We've got NASDAQ off 2.6%. The RUT off nearly 1.75%. The S&P off 1%. And the Dow was green today. Now a little bit in the old red. All right, Mr. Sean, that's a lot of table setting. A lot's popping off in your neck of the woods these days. What is lighting up your tape in all things small cap and indeed equities and volatility, sir?
Thanks, Mark. First of all, I'd love to just offer my condolences to the Sander family. Jack Sander from CME, a former chairman of the board and longtime board member, famous in the futures industry, passed away this past week. So I wanted to just offer my condolences to his family and to CME Group. This loss is a tremendous one. I know Jack was just incredibly passionate about the derivatives industry for many, many years. Just a wonderful guy, had a big family, lots of kids, all adopted, just a wonderful human being. And I just wanted to make sure that I took a moment to honor him today. So we lost a great leader in the futures industry this past week. But lots going on. It's roll week, right? So you've got lots of volume in the Russell 2000 futures contract rolling from the March contract to June. So you're seeing a lot of activity. Volumes and open interest are again skyrocketing. Order flow is amazing, and that liquidity at CME Group has just been absolutely phenomenal. And everybody seems to be having a good experience rolling into the June contract, which brings me to the next big item regarding the month of June, and that's something we've been talking about in the last couple of shows, and that's recon. We've got May 7th coming up, which is rank day, where we come out with the initial list of constituents that'll be in the Russell 3000. That's the Russell 1000 and the Russell 2000 combined. I'm looking forward to continue to dive into that and dive into the sectors and what drives our large and small cap indexes at Russell. I think we've going to have plenty to talk about in future shows. The mini Russell options at CBOE have just been trading some good volumes, good healthy volumes, really, really good tight bid asks in the market on the options at CBOE Global. I'm very excited to see that. There's lots of activity, lots of diversification, and clients trading the product. And the mini RUT, the MRUT contract, MRUT, is off running. It's very exciting to see. It's good to see the volume. It's good to see the tight markets. I strongly recommend everybody check out MRUT at CBOE Global. But volatility. Just a dip below 30, Mark, as you were just saying. Keep your seatbelt on. This market is is exciting. The equity market is strong. Small caps have just tremendously outperformed all major benchmarks. And, as our economy comes out of our difficulties and the COVID vaccines continue to roll out, the U.S. economy is going to get strong and stronger. And one of those indications are that domestic index that we call the Russell 2000. So keep your eyes on it. I'm excited. It's obviously being expressed in trading, risk management, and investing opinions out there in the industry.
Yeah, it certainly is. Like I said, this sell-off is now exacerbating. So let's see. Yeah, it didn't take long, Sean. I just wanted to check because we ran that right before the show started. I said we were shy of 30. Now, as of a few minutes ago, Sean, almost 31, 30.86. So I said, how long are we going to hang out below there, right? And so far, it was not long, was the answer. Because, this sell-off is starting to get pretty blood red out here, listeners. So, small cap vol, not meant to be below 30, at least right now, for very long. And, it shucked that off pretty quickly, up over a point, 1.2 points since we started the show, listeners out there. So, a lot to unpack. Let's go on out to small cap options land, see what's lighting it up. Almost 25,000 contracts on the tape just in this flavor alone, listeners. So, a lot of paper going up out here these days. Let's see. We're just shy of the 2,300 level right now, listeners, 2,297. How crazy does that sound, by the way, Sean? I'm saying we're off 2.3%, off 54 handles, and we're still almost 300 points north of the 2,000 level. Doesn't that sound insane?
Right?
Sounds nuts to say out loud.
Amazing. And we were just talking about breaking the 2,000 handle, in Q4 of last year.
I mean, how long were we talking about can it break 1,600? How long? That was like the narrative of the show.
All of last year.
Yes. So in my mind, when I think Russell, I still think it's 1,600. And I see these levels. They're just shocking to me every time. But that's where we are, listeners, off 2.3%. The lion's share of the paper this week coming 25.2% in the April contract that has looks like about 43 days to go. So we can hang our hat out there. Vol, like I said, going out to April a little bit farther, you're talking a little bit shy of the 30 handle, 27.62 out here, off about a third of a point. So again, that's going to be ticking up to unched pretty soon, I would think, if it hasn't already. And let's see, in terms of skew, last week the put 16.3% bid, this week 17.8%. So interesting. A little bit more bid going up in these puts, which again, seeing what we're seeing out there, hard to blame them. The calls, 10.8% cheap this week, 11.4% cheap. So no bid to be found for the calls. In terms of the action, where the paper was this week, actually the 1900 put, Sean. This is kind of like, this is reminiscent paper, what we used to talk about. It was out of the money puts. 1900 doesn't sound like it's that far out of the money, but it is. Like I said, we're just shy of the 2300 level right now, listeners. So you're talking a whopping 400 points to the dark side. And this is in 43 days. That would be quite the sell-off out there in small caps, Mr. Sean, if this level does come to pass, sir, would it not?
I agree. Yeah, that would be a tremendous move. And, as we see a tremendous move to the upside, we know that the small cap index is volatile, but it's exciting to see. Of course, I don't pick directions. I look at the market as our investors and our customers do, in ways to one, invest in the market, two, harvest volatility in the market, three, to hedge your portfolio to maintain those investments. And it's exciting times. The U.S. economy is going to continue to grow. So I'm excited, and Russell 2000 is clearly excited with a volatility north of 30 still.
Yeah, it's clearly likes itself a little bit of volatility. I think we have some listener comments and questions about all things small cap. Maybe diving into the product suite a little bit there, Mr. Sean. So that should be fun. We could probably, so much going on in equities and volatility, we can probably hang our hats there as well. But Mr. Sean, where should we hang next? I was looking here, our old buddy, Mr. Norland, doing some interesting research in the metals this week, and palladium was up 5.5%. So what do you say, Mr. Sean? We hang our hats in the shiny stuff next.
Yeah, I've been seeing some activity in the precious metals, so I think it's a great place to step next.
Here we go then, a little bit of the old metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals side of life here. Of course, you can find all these for yourselves. Go to the drop down, go to metals, and then pick your poison. We could try to hang our hats in palladium. Unfortunately, it only does about 1,075 contracts, so not a lot lighting it up. If you're wondering really quickly, 72.7% of that coming in the June contracts. Not even that many contracts to list out here, listeners. That's got, 62 days to go. The vol in palladium, 35.8, up about 3.5 points. The skew, 1.9% cheap, where the puts last week, this week, 3.5% rich. Palladium, by the way, up just this week alone, up 13.2%. And the calls, 6% rich last week, this week, 0.6%. So obviously, breaking through some call strikes to the upside. The most active contract was the 3,200. So that's pretty far out of the money. I use most active in air quotes because there's only a couple of hundred contracts here. But still, there's your palladium breakdown if you were indeed so inclined. We'll move on out to some more active metals in a second. But first, let's look at what Mr. Norland was putting together. Eric's been on the show multiple times. He and Blue and the rest of the research team over there at CME do some pretty interesting stuff. They've done a lot in the past about metals, supply and demand, what's driving the factors. In fact, Eric first came on my radar. The first research report he ever did that I heard of for CME was one called Gold Volatility Storm on the Horizon. It was a question mark, and it was all about whether gold vol was about to explode. And we brought him on the show, and literally that day, I think gold vol just exploded. So for me, he's always had a bit of a feather in his cap just from that first paper. He's always been kind of prescient when it comes to the metals. So I pay attention when he's talking metals. And right now, Eric is talking some metals. His newest paper is called Gold and Silver's Supply Side Impact on Prices. Break it down for yourselves. You can go over to cmegroup.com, click on the education tab. Usually these papers are front and center on the homepage as well. It's pretty easy to find. And he talks about the impact, I should say, of mining output on gold and silver prices. Gold mining output in particular seems to have a major influence on both gold and silver prices. So not just gold, whereas silver mining output itself, bit of a weaker input on both of those prices. When precious metals rise, obviously jewelers get priced out of the market for gold, but they can often still afford silvers. That gives a little bit of support to silver. So obviously they have a strong connection and correlation to the jewelry markets out there as well. And of course, the economic value of gold makes it the dominant member of the gold silver ecosystem. Interesting stuff here. Secondary supply and production breakdowns. As always, Eric's going to have a lot of charts, a lot of graphs. You can probably spend several hours digesting all of this data. So check it out for yourselves if you're so inclined. Actually, you know what? I did forget something in the movers and shakers because that'll also point us towards the metals as well. I forgot to run down the vol movers and shakers. Let's hit those really quickly as well. To the dark side, from a vol perspective, it was all euro dollar 30 days, pretty much across the board in the different term structures of Eurodollar. There's different 30 days within the Eurodollar itself. I know it's confusing, listeners, but that's how it breaks down. They were down 14%, 11%, and about 10%, respectively, in the vol decliners. And the vol advancers was not as much, but leading the charge in the vol advancers was silver. Silver 30-day up 2.2%, followed by lean hogs up 1.8%, and nat gas up 1.6%. So what do you say we hang our hats to mix it up a little bit out there in silver? I haven't talked about silver in a couple of weeks since all of the fun with the great short squeeze out there. So let's see what's up in silver right now. Light week, actually, only about 18,000 contracts on the tape. Silver at about 26.14 out there. 55% of that paper coming in that April contract that has actually has about 7 days to go, this one. So that one's going to be kind of hard to parse because the skew is kind of going nuts out there. So maybe instead we'll really quickly hang our hats in gold as well. The other side of the gold-silver equation that Eric was just talking about here. A little bit more paper going up in gold this week. As you might expect, a Fed week always gets a little bit an interest in all things shiny. Let's go on out to the gold drop-down, listeners. I hit select all. Whatever floats your boat when it comes to the shiny stuff. A little bit more paper, like we said, going up in gold this week. 132,000 contracts. That's a little bit more to sink our teeth into. Of course, same problem. April contract was where the lion's share of the paper, 36.8% going up here, and that goes away in 6 days. So a little bit hard to parse. Let's go a little bit farther down the curve, listeners. Let's go down to the May contract. This has about 39 days to go, and that has 23% of the paper. So still a decent amount of paper going up out here this week, listeners. That's where we'll hang our hats from a skew and a vol analysis. If you're wondering what is the gold vol, it's 1532, off about 2/3 of a point out there. So not a ton of vol in the gold product. If you know anything about gold volatility history, you know gold is not historically a big vol mover and shaker. It kind of remains anemic for a while. Then it has these fits and starts where it can pop. Look at Eric's paper from a few years back, but it doesn't tend to keep that bid very long as well. So it's an interesting one to watch from that perspective, but it can languish for a long time in some kind of anemic volatility doldrums out there. In terms of the skew, last week, by the way, we're at a 1735 coming into showtime, so up about 3/4 of a point net on the week. The calls, I should say the puts, 2.2% rich. This week, 4.3%, so a little bit put heavy this week. Calls, about 1.3% rich last week, 2.2% rich this week. Not a huge skew change in either direction. A little bit more of a bid for the puts than there are for the calls. But other than that, not a heck of a lot of change out here skew-wise this week. The most active contract, going back to those even money strikes, it's almost a tie between the 2,000 calls going up here in May, and then the 1,700 puts going up here in April that have about 6 days to go. They did about 5,700 for the April puts and about 5,600 for the May calls. So I guess we'll go to the April puts first. 5,700 of those bad boys going up this week. The lion's share of them come in yesterday, not surprising, hot on the heels of the Fed. 2,800 contracts there, 1,500 on Tuesday, 1,100, almost 1,200 today. And again, a good chunk of that yesterday closing. We'll see what today's paper is up to. Let's go out now to the 2,000 calls, 5,600 of these bad boys going up this week out here in April. The lion's share of those on Monday, 3,100, so some pre-Fed action, followed by 2,500 or so going up on Tuesday. Both of those days predominantly opening. So interesting paper. Not so much going up yesterday or today. It's all Monday and Tuesday here on the 2000. So those are interesting strikes to be opening on a week when there's the Fed announcement going on out there. Interesting stuff afoot here. Let's look really quickly. There's always some fun, aberrant upside paper to be found in gold. Let's see if that is the case this week as well. Yeah, it looks like the 2,500s were lighting it up this week, listeners, out there in DC. You can usually find this stuff out in DC if you are so inclined, listeners. 2,500s doing 1,500 almost exactly this week. A 500 lot on Monday, which was slightly opening. Actually, a 501 lot to be precise. 501 again on Wednesday. For some reason, we don't have an OI update on that one. And then 502 again today. So someone's been trading almost the exact same size every day in the 2,500s in DC, except for Tuesday this week. That's a bit of a weird one. But again, when you look at the upside in gold, it's all weird, which makes it kind of fun to watch. You got 1,000 of the 2050s in DC also going up today, about 1,100 total on the week. And then 1,000 of the 2100s have gone up this week as well. But again, different days as well. So it's not like they're lining up like any sort of vertical. Like there usually is a three-way vertical to be found up here in gold somewhere. This week, not so much. It's 500 lots a lot or 1,000 lots, but on different days. So none of it lines up, which makes it even more fascinating. So yeah, if you're looking for weird upside, gold is the place to look. All right, Sean, we talked equities, we talked WTI, we talked a little bit of silver and gold and even palladium. We kind of hit a metals trifecta there. Where else should we hang our hat on the program this week, sir?
It would just be really good if we could hit rates. I think we've had some interest rate activity in the last couple of weeks, and probably a good place to head next.
Did something happen in rates? I was unfamiliar, sir. I was busy doing other things. All right, I guess we can make that happen. Let's make our next stop here in the rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, let's get to it. Into the world of rates. Obviously, rates making some headlines this week tend to be one of the things that's spooking spooking the equity markets out there, the prospect of yields on product like the 10-year, spooking some folks. By the way, speaking of all things Fed, we were talking about the Fed Watch on the show. You guys can check it out for yourselves. You know where to go. Just type CME and Fed Watch into any browser. You'll get right to it. It's pretty easy to find. They obviously had the meeting this week. There wasn't a high probability of a 25 basis point increase, but they were pricing in, as you recall, listeners, when you get out to September and beyond of this year, they were pricing in a little bit over 9. I think it was about 9.1% probability that we'd see a roughly 25 basis point increase in rates going towards the end of this year. The Fed obviously signaling this week they're not going to do that. So the markets clipped that probability, but didn't exactly take it away, as you might expect. The market's still pricing in a bit of a chance that there will be a 25 basis point hike, certainly more than there was, let's say, a month ago out there. It was 9.1% out there in meetings like the September and December contract. Coming into today's show, the November is at 6.4%. The September contract's at about 4.4%. So the probability for the September rate hike has been cut more than in half. So that one's kind of taken a bit of a beating. And then December, we're looking at a probability of about 6.4%. So that one has gotten about a third of its probability taken away. So still not down to de minimis by any means. Still a demonstrable measure that something could happen by the end of the year. Demonstrable bid for that. But again, it's not, 25% or anything either. So they have been clipped a little bit as a result of this week's Fed action, which is pretty much what you would expect. Let's go on out to the 10-year, see what's lighting things up, see what's spooking people so much out here in the 10-year this week. 10-year doing some paper yet again, as you would imagine. 2.4, closing in on 2.5 million contracts on the tape already this week, listeners. The lion's share of this, one thing I like about the 10-year, unlike the Eurodollar, which will fill multiple pages with strikes and months, the 10-year, you can encapsulate it in one screen. Makes it a little bit easier. So if you hit the select all function, listeners, you're not going to be overwhelmed the way you are if you're diving into Eurodollars for the first time. And this week, we've got a little bit more than a third, about 34% of the paper coming in that April contract. By the way, in the April contract, 131.1 coming into showtime, off about 0.15 or about a third of a percent out there. Also, if you're wondering, what is the vol in these products? We said it before. We were just talking about a 15 vol in something like gold, and you're talking about a 30 plus vol in some of the small caps. You're talking higher, 40 odd vols in the energy products. So it depends which complex you're looking at, what levels of vol you can expect. You get into things like cryptocurrencies, you're talking triple digits and beyond. Out in the rates, particularly farther out in the curve, you're talking 10-year and stuff, vol's a bit of a different beast. You're talking about a 5.5 in this contract this week, listeners. So not exactly a ton of vol, and it's effectively unched. The vol hasn't moved because it's hard to get much movement when you're hanging out at a 5.5 vol. It's just kind of the name of the game there. In terms of skew, the puts last week, 6.9% rich to that already anemic 5.5 vol. And this week, 6.3% rich. So puts still bid. Calls last week, 7.9% cheap this week, 5.7% cheap. And the number one hot contract out here, the big trade this week, listeners, we're talking 101,000 of these. So more than all of the gold complex, certainly well more than silver, 5x silver, just in this one option on the 10-year. That's, again, how much paper is going up out here. 101,824 to be precise. That gets us to the April 131 even put. That's where the action was this week. 101,824. The lion's share of that, you can probably guess when it was. It was Wednesday, 72,212 going up. Of that, 14,000 was opening. So not a ton of opening, as you might expect, taking some stuff off after a Fed meeting, but still opening nonetheless. 18,000 today, 8,200 on Monday, a paltry 3,200 on Tuesday. Everybody holding their breath on Tuesday, waiting for Wednesday. But that's a heck of a lot of paper, listeners. Then we go from there to the 130 even puts. So some even money puts lighting it up out here. No fractions, no half strikes, anything like that this week. 130 even, doing 86,800 contracts. This one's a little bit more split. It's 32,400 On Wednesday, 32,300 so far today. Of that yesterday, about 7,000 of that was closing. 14,000 going up on Tuesday. A good chunk of that, almost 12,000 opening. So a lot of opening paper on the 130 puts going into the Fed announcement, which is different than the 131 puts, which was pretty light. That's kind of interesting. And about 7,300 going up on Monday. So decent action out here. Then we got number 3. There was a call to be found out here. It was the 132 half calls, also again in that April contract, doing 76,000 almost exactly. Most today, actually, 35,600 going up today, 31,500 yesterday. Of that, about 7,600 was opening, 7,300 on Monday, 1,500 on Tuesday. So not a lot going up on Tuesday there either. So there you go, listeners. A storm of paper to be found this week in the 10-year, the product that seems to be spooking everybody out there. But you know what, Sean? You know what never spooks us? It's our listener mail. So let's get to it. A little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback, the portion of the show where you folks take the reins with your questions, your comments. Sometimes we shine the light back on you, as we're doing this week right now. I have a fun volatility poll up there for you, listeners. You guys love talking about volatility. People like talking about volatility in general. They say this product is volatile, that product is volatile, but which product really holds the crown? You know, people say Bitcoin's volatile. They say Tesla's, but they say volatility itself is volatile. They say the crazy meme stocks are volatile. So we put it to you folks. Which of these products has the highest 30-day volatility right now? When we posted that poll, that was earlier this week, but the levels are going to be roughly similar right now. We ask you, honor system, no cheating, no pulling up on your brokerage platform. Use your gut. What does your gut tell you? We gave him 4 choices, Sean. We said the name that's synonymous with vol for a lot of people, which is Tesla. Or Bitcoin. That one's moving quite a bit these days. A lot of people think Bitcoin is synonymous with volatility. Some folks think volatility itself, VIX and equity volatility itself is very volatile. So could be VIX. Or, Sean, it could be the king of the memes, a.k.a. GameStop. Right now, Sean, our audience is leaning heavily towards the memes, 61.8%. I thought there'd be a stronger punch for Tesla and for Bitcoin. Right now, Bitcoin is number 2 with 19.1%. Tesla number 3, 13.6%, and vol itself, VIX, at only about a 5.5%, Sean. So first off, what are your thoughts on what our audience is thinking, Sean? And then B, do you agree or do you have a different vote, sir?
You know, I'm not going to vote. I think our listeners' opinion is just really interesting, and it's relevant to the times. You know, it's where people are looking, it's where people are listening, it's what people are watching, it's what people are trading. So I think all of those in the equation of volatility bode people to point their volatility arrows at where they have interest, where there's been activity, where there's been news. It's all interesting. You know, our equity markets continue to be volatile. Our oil, our energy complex that we talk about every show continues to be volatile. It's just all interesting, and this show is all about volatility. So, you know, I think the highest vote for me would be TWIFO as being the most volatile. How's that for a vote of confidence?
A very volatile show. Well, we come in at the same time every week, so I guess it depends what you mean by show volatility. And we're hitting people every week. We're not missing shows. Maybe it's just I don't know. Maybe it's just what level of awesomeness. Is it a million or is it like a 10 million awesome? I guess that's the question. That's where the volatility comes in, Sean. We always try to deliver as much awesome as you could possibly pack into a single hour, listeners. You already had our requests for oil here from Wayne. Here's one right up your alley here, Sean. This comes from Fesk1. He says, hey guys, love the network. Well, thank you, Fesk1. Go on to say, just wanted to chime in to let you know I traded the new mini Russell options after listening to the last episode. Calls, obviously, exclamation point. Thanks so much for everything that you do. So there you go, Sean. We talked a listener into the dark side. They have listened to the show, and now they've joined the call frenzy that is Russell 2000. In this case, the new mini options. Sean, what do you think?
It's exciting. It's a smaller notional contract. It makes sense. People will have good experience trading the product. The markets are tight. Come on in, trade MRUT. Cboe Global's got a fantastic product, and Fesky1, great comments, and best of luck trading. Know your risks, know your entry point and your exit points, have your strategy down, and stick to your disciplines. But very excited to hear you trading MRUT. It's a fantastic product, and we're very excited about it at FTSE Russell.
Well, clearly the listeners are too. So if you have a Russell 2000, you've been trading it, maybe you're interested, hit us up. Let us know what you're thinking out there. Listener sharing also with us a tweet from another listener goes by the handle of Pomp. I guess they're in the crypto space. Kind of easy to tell from their tweet, chiming in saying there's a higher likelihood that gold goes to zero than Bitcoin does at this point. One is growing in value, the other is falling. Don't get caught on the wrong side of this paradigm shift. So this has a lot of likes and a lot of tweets. Obviously, the hodlers are going to like this one. Obviously, we've heard the arguments about inflation. Yeah, it's hard to argue. They're printing some money in DC these days. That's going to have a ripple effect through the economy. And that's certainly been what driving a lot of people into Bitcoin of late. Whether gold goes to zero anytime soon, I have a hard time seeing how that could possibly happen, and the rest of our economic system remain viable. If gold goes to zero, I think we got some other problems on our hands outside of the relative value of those two currencies. There's something else going on in the broad society that used to be the old saying when I used to be in the SPX pit. You could sell, the 10 puts or even like the 100 puts out there, because if S&P breaks below those levels, chances are no one's coming to collect. Something else is going on. The world's on fire. And gold at zero, a similar point there. But I get throwing a little fire out there for the crypto kitties. I get it. All right, next up, we got Nickelton saying, what would you say is the most frequent problem or complaint that you hear from your listeners about futures options? Ooh, we could do a whole show just on this, Sean. Let me see if I could narrow it down. A lot of the listeners for this show, they're coming to futures options for the first time, having traded your traditional equity options. So your Apples, your SPYs, your Googs, those kind of things. The things that everyone's trading, maybe some games now these days. So they're used to how traditional equity options work. They're used to having effectively, the one underlying and then options on it that expire on different months. Kind of nice, kind of easy to wrap your head around. Now you're getting into the realm of futures. You have multiple underlying futures and different months that coincide. And I have to say, probably one of the most frequent complaints we hear from that audience transitioning into futures, getting past, having to open the futures account, everything. That used to be a big hurdle. These days, brokers have made that a lot easier. So that isn't as big of a complaint these days as it used to be. What is still a complaint, though, I remember talking about this with Dan Grams on the show not too long ago, is just the opaque, impenetrable symbology that goes up in the future space. If you're coming in, let's say you're a traditional Apple trader or SPY, those tickers are pretty intuitive, pretty easy to see what you're getting. SPY is just SPY. Apple is AAPL. It's pretty easy to understand and know what you have going on out there. You get into the futures options realm, you get into a whole different world of symbology. And quite frankly, a whole bunch of it doesn't really make a lot of sense. I'm just going to put it out there. The months end in D with Z. That makes some sense, but they don't start with A. There's no real rational rhyme or reason to how they go, let alone what tickers are applied to which product, let alone a lot of the platforms don't do a great job of really interpreting that for you. If you go into a lot of equity options, you see the months and the strikes, you're pretty much good. You don't really need to know what the symbols are that you're trading. But a lot of the platforms in the futures options world are still disseminating just here's this symbol and here's the strikes. And people are left looking, wait, what is this? What am I trading? What month? What underlying? What series is this? There's not a lot done on the part of the brokers or the other players out there, the vendors, to really translate this for people. They shouldn't show you an opaque symbol. It should say, hey, bam, this is the March WTI, whatever it is, whatever the product is you're looking at. Doing some of the heavy lifting for the end users. I know longtime futures heads will say, oh, well, you get used to it. And you do, but it's a hurdle. And we've seen in the equity options world this explosion of small retail accounts coming online. We want to see those people be able to trade futures options as well. And just removing these unnecessary layers of abstraction will go a long way towards doing that. Sean, what are your thoughts on this? Do you agree with that? The obtuse symbology, or do you think maybe it's something else that is the biggest stumbling block for new futures options traders these days, sir?
This all leans towards education, right? And I think what our exchanges do extremely well is educate their customers. They have phenomenal education links on their websites and places to go to not only read, but you can watch videos, you can simulate, you can interact, you can take quizzes. I mean, there's all types of fantastic education on CME Group's website, on CBOE's website. It is good, but when you get down to the fundamentals, you got March, June, SEP and DEES. You've got H, M, U, and Z. Like if you can just write these monthly expiries down and then just figure out what products you want to trade and write down the and there's other months and there's obviously the strikes when it comes to options, but it really is just a matter of practice, learning, practice and learning. And I just strongly recommend that anybody struggling, just go to the CME's website. They actually have educators that would be happy to work with you, and chat with you. I don't know if they have a chat. I shouldn't say chat, but you can always email them and ask questions. So there's places to go. There's people that can help you if you have questions. So I strongly recommend practice, learn, educate. Go to the exchanges websites and look at the education resources that they have.
Well said, sir. Yeah, we get this complaint about the TWIFO reports too, because they're showing you the symbol right there in the left corner. They're not showing you, the month or anything else like that. So for people who are new to these reports, sometimes they have a hard time understanding them. So I say if you're coming to these new for the first time, a couple of pages you should have up next to them. Like you type CME contract month codes next to it, you'll have a whole page explaining them all, like Sean was just saying. So that'll help you give you a better sense of frame of reference for what you're looking at. And also CME does also offer a symbol search page. You go to that page, type in whatever symbol you're confused about, and it will help you figure out what the hell product you're actually talking about there. So those are a couple of things that will help you get started in the joyous world that is futures options. Unfortunately, that music means we've come to the end of another epic journey through the world of all things futures options. But before we go, Sean, like our listener, I forgot their name. What was it? Fesk1. Diving into those mini Russell options. Folks are on fire for all things Russell 2000 these days. So if they want more info, more analysis, more webinars, where should they go? What should they do, sir?
Easy. Just go to FTSERussell.com. Just go to our website. And if you want webinars, you put FTSERussell.com/webinars. If you want blogs on the recent research on our various indexes, most importantly, the Russell 2000, our small cap index, go to FTSERussell.com/blogs. And there's just an incredible amount of information to share. What's driving the indexes, what's moving the small cap stocks from a sector perspective, how it's performing against its global small cap benchmarks around the world. There's just so much information on the FTSE Russell website. Mm-hmm. Have at it, and always ask me, Sean.Smith at LSEG, London Stock Exchange Group.com. Happy to help you any way I can. And also go to CME Group, their website, CMEGroup.com, and CBOEglobal.com. They both have tremendous resources regarding their derivatives products. So happy to help. And it's just great to be on the show today, Mark. It was a great show.
It was a fun one indeed. You know where to go to find out more about all things CME. First off, go to our page, CMEgroup.com/TWIFO or /TWIO. Both of those work. Lowercase, uppercase, for whatever reason, seems to spook the browser. Not sure why. But that will get you to our reports. You can type in literally any product that trades over there at CME, and you can see exactly what's going on, like I just did today. The skew, the volume, the volatility, the hot trades, all that kind of stuff. So click on those. It's fun. It's certainly very useful if you're trading these brands. It's kind of the only place you can really find this information. It's not really easy to find anywhere else. So cmegroup.com/TWIFO or /TWIO is the place to go to begin your journey. And of course, check out the educational content that Eric and Baloo and everyone else are putting up there, the research, everything else that they're doing, everything else cooking over there in the land of CME. And on behalf of myself and everybody over there at CME land and everybody over there in FTSE Russell land, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions, for trading, for everything else you folks are doing. Keep it up. We'll see you back here tomorrow, noon Central, 1 p.m. Eastern, to dive into the world of crazy volatility. Spoiler alert, there's a lot to talk about, so we'll have a lot to say on the show tomorrow. Kicking it all off again on Monday with episode 1 of the Option Block, all the way through to Thursday, and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.